Hello everybody, welcome to the series on what was happening in the business world when you were sleeping last night. Well, FTX has filed for bankruptcy. Nothing new in that, right? However, the numbers involved makes it a very interesting case. 100,000 plus creditors and 10 to 50 billion dollars of liabilities. That's a lot of money and a lot of people involved, right? In this video, we are going to talk through where did this money go, right? That's a lot of money that FTX has generated through three different ways. Number one, through the massive amounts of capital it has raised from marquee investors like Sequoia. Number two, through customer deposits on their crypto exchange platforms. And number three is through their operational income by running this particular FTX crypto exchange platform. So before we jump into where did this money go, I would love if you can subscribe to the channel and also like the video. It will help us reach out to more people. Now let's jump in right away with the first bucket of where this money went. Simple, and let's say nothing different from majority of the other companies too. It's basically marketing. They have spent $135 million for getting the naming rights of Miami Heat's basketball arena. Right? That's a lot of money, but you can't say anything against it, right? Because Byju's is doing the same. They are sponsoring cricket World Cups, they are sponsoring football World Cups, they are sponsoring Indian cricket jerseys, so on and so forth. So all the companies are doing that when they have money. Fair enough. The other thing that they have also done is for Super Bowl, they have spent $23 million on one ad. So close to $180 million on marketing, right? Number two is related to their expenses on political donations. Right, the campaign donations were equivalent to almost $40 million in the last particular elections that have concluded just the last week. Right now, this is the sixth largest donation for this particular election. Now, the question is, why are they doing it? Of course, to be in the good books of the political leaders and also rub shoulders with regulators. If they're doing all these things, then the question is, why did it move its headquarters to Bahamas? Well, it did move the headquarters to Bahamas. At the same time, they also rented a 5-bedroom penthouse for $30 million. Employee expenses, right? $180 million on marketing, roughly $70 to $80 million on regulatory stuff, campaign donations, and let's say employee expenses. But where are the big bucks going? FTX has invested close to $1.1 billion in crypto startups in the last 1 to 2 years. Well, FTX is a crypto exchange platform, so how can it invest money? It invested money through its sister companies, Alameda Research and FTX Ventures. So both these companies together have invested in 185 companies, right? The companies which were struggling, companies which were about to go bankrupt, irony, right? The companies which are about to go bankrupt, and companies which also promised good things in the crypto space. However, the fundamental aspect is that all these investments were risky bets. And where did this money come from? Well, you guessed it right. Number one is customer deposits, and number two is the investments that it was raising. Now the question is this legal? Let's not even go there. At best, we can call it shady if you are using customer deposits, because FTX has already highlighted that they are not going to touch customer deposits in the terms and conditions itself when any customer was about to get started with their account creation. So let's leave that over there. $1.1 billion, big amounts, but this is how FTX was doing the investments in different companies. Now the other part to the same investments decision is that FTX Ventures will go and invest in a particular startup. Then that particular startup in the crypto space will go and launch their coins, right? Because every company, every crypto company out there can launch their coins, and they list these coins on the FTX platform. But there are hundreds and thousands of other coins as well, so nobody would care about them. In this scenario, Alameda Research, the other particular FTX sister company, they come in and they buy these coins for the startups in which they are invested, right? So this is called as counterparty market mover. One company is investing in a particular company and they are letting these coins be published on the FTX platform itself, and the other sister company, Alameda Research, is now trying to jack up these prices, right? Artificially, so to say. Again, is this legal? Definitely not, at least in the regular financial instruments, financial markets. But this particular crypto space has no oversight from the regulatory bodies, so everything works. FTX Ventures and Alameda Research, all these three companies working together. The final place where the investments went from Sam Friedman-Bank's accounts are into the venture capital funds itself. Yes, there's a news article that I'm basically attaching in the description box. Please go read that, which highlights that SFB, the founder, has invested close to $500 million in Sequoia and other venture capital funds. Well, Sequoia is the company which is giving startups money to run their business. Then where does Sequoia get that money from? SFB looks like is one of them. Now the question is, if there is a good company, right, a good platform like FTX, undoubtedly it's one of the good platforms out there for cryptocurrency exchange. Now, backed by good investors like Sequoia, obviously support from regulators too, because they are rubbing shoulders with them, customers would be inclined to get started with their trading activities on this platform compared to other platforms, right? But unfortunately, it's not just you and me, the retail investors, who are losing money, but some of the big guys, hedge funds, have lost close to $1 billion because of the fiasco that was created by FTX in the last week. So if you are really sure about, hey, I don't mind losing my investments that I'm going to go and put it in crypto, then yes, that's all fine. But understand that these crypto investments can be evaporated in seconds, happening to the best of the best guys. So it will definitely happen to you and me. So take care, guys. Please do not think about financial instruments which are not in the oversight of the regulators, because there is nobody to help you and nobody to help me. If you like this video, please press on the like button and also let me know what you think about this entire scenario in the comments box. Would love to hear more from you. Take care. See you tomorrow. Bye-bye.